Stock markets traded higher today following yesterday's declines when shares saw the biggest falls since the 2008 global financial crisis. The price of oil also rebounded. UAE markets today closed in the green. To give us an update on the factors investors should be aware of, we have Jameel Ahmed on the line from London. He's Global Head of Currency Strategy with FXTM. Great to see you, Jameel. First question for you. Are we likely to see an oil price war in the coming months, do you think?
It's something that we definitely can't rule out. But if there's a good thing to come out of this, there's short-term pain for lower oil prices, but a long-term gain. That hopefully OPEC and oil producing nations will then take more market share and control of the market over the longer term. So what's initially happened is the OPEC and the OPEC alliance had a breakup last week, which has now led to this conflict of interest when it comes to who's going to produce what levels of oil output. And this is what contributed towards the 30% market crash. Now, we know that oil producers around the GCC, and specifically Russia as well, have lower oil production costs, whereas their main competitors, which is the United States and shale production, they have a very high level of cost. So hopefully what the thought is despite this initial shock in the oil price, over the longer term, these oil producers, historic oil producers such as the GCC, Saudi Arabia and so on, and Russia as well, will be able to take more control of the market share because shale and the United States will no longer be able to compete with what is still historically very depressed prices of oil.
Now, Jameel, will Asian buyers continue to maximize lower Middle East crude oil prices for April, do you think?
This is another positive that can come out of this because Saudi Arabia is also offering a discount on its own oil prices. Generally, if you look at the major importers of oil, you have China, you have India, you have Japan, and you have South Korea. Now, China, as we know, is switching its economy back on after what has been a couple of months of the virus fears, but productivity is starting to come back online. So this provides a good price point for China to begin importing commodities again, which would help the price over the longer term. Now, when it comes to Japan and South Korea, these are economies that are going to face a wider impact from the virus threat as what was initially feared. So these economies can also benefit from lower commodity prices.
What about the current mood of the global stock markets today? What are you seeing?
It's still fragile, but thankfully we are seeing a bounce back from what was a really treacherous day yesterday. What I saw, really generally speaking, is over the past couple of weeks we had so much tension and we had what was, as an analogy, a sinking ship scenario. The good thing out of all of the oil price conflict and everything else that's gone on, that it has sunk that ship overboard and now we are in recovery mode. As long as the virus threat doesn't get more severe than what world headlines have already dictated over the past 2 weeks, there is belief that stock markets and world markets can rebound from here. But the antagonist and the villain, if I could use a movie scenario, is the virus. It's something that is not controllable in terms of it is a health epidemic. It's not a market situation. And if this virus does get stronger, this does create a more fragile environment for investors. But at least a great deal of selling happened yesterday, and there's more positivity in the air today.
Just one quick final question for you, Jameel. Running out of time, but how should people invest money in volatile times? Are they looking at safe havens like gold, for example?
This is exactly what's happening. In volatile times, what we always say is safe havens are your best friends. And when it comes to financial asset classes, that's the Japanese yen and gold. Gold prices are now up over $500 over the past 1 year, with an increase of 30% of its valuation. Gold has touched its highest levels since 2011, as of yesterday at $1,700. So there's a lot of good news for gold buyers and those interested in gold price out there during what are still fragile times.
All right, we'll leave it there. Jameel Ahmed, many thanks.
Yeah.